Ladies and gentlemen, good day and welcome to the Maiden Forgings Limited H2 FY25 and FY25 results conference call hosted by Kirin Advisors. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. I now hand the conference over to Mr. Harshil Ghanshani from Kirin Advisors. Thank you, and over to you, sir.
Yes, thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Maiden Forgings Limited. From the management, we have Mr. Nishan Garg, Managing Director. With that, I now hand over the call to Mr. Nishan. Over to you, sir. Thank you.
Good afternoon, ladies and gentlemen. I am delighted to welcome you to Maiden Forgings Limited earnings conference call for the second half and full year of financial year 25. Thank you for joining us and for your continued interest in our journey. From our origins as a proprietorship in 1988 to becoming a publicly listed company in 2023, Maiden Forgings has evolved into a trusted manufacturer of steel guide bars, wires, and pneumatic nails. With over 35 years of experience, we are proud to serve critical sectors including automotive, engineering, infrastructure, and increasingly defense and consumer markets. Our operations are spread across 3 advanced manufacturing units in Ghaziabad with a combined installed capacity of 53,000 metric tons per annum. Backed by complete in-house capabilities such as annealing, cold drawing, peeling, grinding, and testing, we ensure product consistency and speed, making us a reliable partner to over 500 customers, including exports to the US and Europe. A key milestone during the year was the acquisition of a 4-acre industrial plot in Modinagar, located about 25 kilometers from our current facilities. This facility will allow us to consolidate 2 of our existing plants into a modern integrated unit, unlocking operational synergies, enabling higher output, and enhancing workflow efficiencies. Once complete, this move is expected to result in annual cost savings of around 2.5 crore rupees. In line with our ESG focus, we are also planning a solar installation at this facility, which will meet up to 50% of its energy requirements. This shall also enable us to plan our future expansion for the next 5 years without any further land acquisition in the same city, thus making the process faster. We also marked our entry into the B2G segment during financial year 25, becoming a registered supplier to the Ordnance Factory Board, Kolkata, and successfully executing our first order in September 2024. This has paved the way for further supply relationships with HAL, NTPC, and BHEL, aligning us with India's growing defense and public infrastructure ecosystem. In parallel, we continue diversifying our product portfolio with high-margin offerings such as stainless steel guide bars and coil nails. Our B2C initiative gained traction, with coil nails now listed on Amazon India, and we are gearing up to launch on Amazon US and UK as well. To support our export strategy, we are also exploring overseas warehousing, which will help reduce shipping costs and improve delivery timelines. India's steel industry continues to show strong long-term potential, even as global markets face challenges due to subdued demand and pricing volatility. India is now the second largest crude steel producer in the world, and domestic demand is expected to rise significantly, supported by the government's focus on infrastructure development, affordable housing, and urbanization. Sectors such as defense, railways, and construction are leading this demand, offering sustained opportunities for value-added steel manufacturers. Initiatives such as National Steel Policy, the Production Linked Incentive (PLI) scheme for specialty steel, and the Vehicle Scrappage Policy are further catalyzing investment and modernization across the sector. Import substitution and indigenization, particularly in defense and engineering, align perfectly with our focus on precision engineered specialized products. These trends are creating a favorable environment for companies like ours, committed to quality, innovation, and sustainability. These industry tailwinds are well aligned with Maiden Forgings' strategic direction. As India's infrastructure, automotive, and defense sectors expand under strong policy support, the demand for value-added and specialty steel products is expected to surge, creating a favorable environment for our precision engineered offerings. The government's focus on indigenization and import substitution, especially under the PLI scheme for specialty steel, opens new opportunities. Moreover, our investment in a solar-powered consolidated facility positions us ahead of the curve on sustainability, in sync with the industry's shift towards low-carbon manufacturing. Collectively, these trends reinforce our ability to capture market share, expand into high-growth sectors, and build a future-ready, resilient business model. Let me take you through our financial performance of H2 FY25. We remain focused on strengthening our balance sheet. Our target is to reduce debt to below 10% of annual turnover, supported by improved operating cash flows and monetization of surplus assets, including from the plant consolidation. In H2 FY25, despite industry-wide headwinds and pricing volatility, we maintained operational stability and continued our strategic push into high-margin segments. We reported a total income of 104.37 crores with an EBITDA of 10.13 rupee crores, reflecting an EBITDA margin 9.71%. Net profit for the period stood at 2 crores. These numbers reflect the strength of our product mix and the resilience of our business model amid a dynamic market environment. For the full year FY25, we achieved a total income of 213.57 crores with EBITDA at 19.91 crore rupees and an EBITDA margin of 9.32%. Our net profit for the year was 6.05 crore. This performance underlines our focus on efficiency, premium product offerings, and disciplined cost management. As we look ahead, we remain committed to strengthening our financial foundation by reducing debt, optimizing working capital, and reinvesting strategically to support long-term growth and value creation. These results underscore our ability to sustain steady operations while navigating market fluctuations and focusing on long-term value creation. Our entry into the B2G segment through our maiden orders from the Hindustan Aeronautics Limited positions us to capitalize on the immense potential in defense and infrastructure. Driven by the government's indigenization initiatives, we have successfully expanded into the B2B markets through the sale of coil nails on Amazon India and now planning to broaden our reach by launching on Amazon US and UK. We are actively diversifying our product portfolio by entering high demand, high margin categories such as GI wires and stainless steel screws. These additions strengthen our presence in premium segments and align with our broader strategy to enhance profitability through value-added offerings. Looking ahead, Our long-term aspiration is to establish Maiden Forgings Limited as a premium, innovation-driven brand that is trusted across B2B, B2C, and B2G markets in both domestic and international arenas. Financial year 25 has been a period of meaningful progress despite a challenging backdrop, and we believe our strong foundation, focused execution, and evolving capabilities have set the stage for the next phase of sustainable growth. I now invite you to ask questions regarding our financial performance, operational strategies, and growth initiatives. And I once again thank you for your time and continued confidence in Maiden Forgings Limited.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Ishita from Unity Finance. Please go ahead.
Hello.
Yes, ma'am. Please go ahead with your question.
Hi, good afternoon. So my question is, with significant groundwork laid in H2 financial year 25, what are your key strategic priorities for H1 financial year 26?
Good afternoon, Ishita. I would like a bit clarity on your question in terms, are you talking simply performance-wise or what further groundwork we would be doing in H1 financial year 26?
I wanted to know what groundwork we will be doing.
Okay. See, first and foremost, the priority is that already since we are, we have started supplies to HAL, NTPC, and currently we have also delivered an order to BHEL, and again we have repeat orders from HAL. So first and foremost would be to, capitalize on this particular segment, that is B2G. These three are already onboarded and we are, getting repeat orders now as well. And the basic concept would be कि हम इनको maximize करें and further और जो B2G segment वाली companies हैं कई सारी जो list में हैं उनके साथ हम further associate हों. जैसे for example we are trying for some defense companies and for the Northern Railways as well. So that would be the first and foremost focus area, that is B2G segment, to penetrate that market in a better manner. Though it's a long-term process, like it will take another 1 year or so, but whatever maximization we can do within H125, we would be more focused towards that, especially considering the current boost that the Indian government is giving to infrastructure and defense segments particularly. So first and foremost is that. And secondly, it would be more towards, like I mentioned in my opening remarks as well, that we are focusing on, creating little infrastructure. I won't say full-fledged facilities, but a part or segment of infrastructure in, US and Gulf markets, because I have never ever before this call mentioned anywhere that we would be doing something in Gulf markets. But during the last 6 months, we found certain opportunities, and even like the pneumatic nails product, which we planned for US majorly, US market, though last year was, a bit tricky in terms of all the geopolitical scenarios. But finally, the clouds have scattered and now we have a little bit clarity. Thus, the weak point that we were facing, we recognized that very well, why we were not able to boost sales of that particular product in the US market. And that was the reason that we required a tie-up with the importer over there who can do all the import formalities, and we can do deliver the products to the customers. So that infrastructure we have already created in over last 1 month, and that is why now currently we have like 5 containers for that particular product in pipeline for this month. So that is one key factor, like establishing a part of infrastructure in the US and Gulf so that we can immediately capitalize on the opportunities that exist, and the opportunities are quite huge in terms of sizes. So these two would be the major focus area for H1 financial year 26.
Okay, thank you so much for the details. I also wanted to know, do you foresee any headwinds, raw material costs, logistics, or customer demand that could impact near-term growth?
Sorry, I didn't get your question. Can you repeat that?
Do you foresee any headwinds, raw material costs, or customer demand that could impact your near-term growth?
Currently the macro factors are very volatile, right? But looking at the trend over the last 1 year or say 18 months, as such, there is no, threat that I foresee in the near future. So maybe there might be opportunities because recently, like last month, Indian government has posed some anti-dumping duties against China, especially in the steel sector. So that is giving slight advantage, in the present time. So maybe there are more such actions which might give us an advantage.
Okay. And I would like to know, what is the status of your entry into Amazon's international marketplaces and the B2B digital platforms you mentioned? Are these expected to be revenue contributions in financial year 26?
I would say, this is particularly first and foremost, these are more towards, branding exercises rather than just revenue, because that will establish us as a brand. Like already we are there on Amazon India and we are generating very slight revenue, but due to that branding, what is happening is the bigger players who are buying coilnets, they are reaching to us more, and that visibility is creating further, a snowball effect in the business. So that is the primary purpose of getting listed over there, that we create visibility, due to which more number of queries come to us and a bigger chunk of business gets diverted towards us due to that visibility. Yes, we are very much focused, like I already told that, the two things, one is B2G and second is, establishing a small infrastructure, which were bottlenecks for us last year in making our product dispatch more to in the export market. So that visibility is a sub part that we would be focused on this year, and they will ultimately, not directly but indirectly, give us a boost in revenues in this financial year.
Okay. Thank you so much for answering my questions. I'll get back to you if I have any more questions to ask.
Thank you so much. Thank you.
Thank you. Our next question comes from the line of Bhavesh Chauhan, who's an investor. Please go ahead.
Sir, in terms of sales volume growth...
Mr. Bhavesh, before you go ahead with the question, may we request that you use your handset, sir? Your audio is very low, sir.
Hello, am I audible now?
Yes.
Yes, sir. Please go ahead.
So my question is, what is the kind of volume growth that we are targeting over the next, let's say, 2-3 years?
The volume growth that we are targeting over next 2-3 years is at least, annually we are targeting around 30 to 35%, because already we have, like last year, due to lots many macro factor pressures, we were not able to grow as such. Thus, we did a kind of introspection into our strategy, into our policies, that where it's required. Once you see that growth isn't happening as you expected, so you have to introspect many factors, and you have to, create a ecosystem or a protective shield against these macro factors, and so that you can ensure growth. And that is why this year we are targeting a 30 to 35% jump from our existing revenues, so that we can slightly cover up for the growth that didn't happen last year. And definitely once you reach that level, you would want to continue with that. And in that ways, I can't do as long as to comment on 3 years growth pattern, but definitely for this year, I would be targeting 30 to 35% kind of a growth in the revenue.
And in terms of margins, sir, are we looking at better margins from current level?
वो भावेश जी, वो तो मैं हमेशा से ही कहता आया हूँ कि मार्जिन मेरी पहली प्रायोरिटी मार्जिन रहेगी, सबसे पहली प्रायोरिटी. लास्ट ईयर ऑल्सो वी डिड सम errors in the last quarter, due to which we were not able to maintain that kind of high margin level. So this time we won't be repeating that, and our primary focus would remain on the margin.
Right. And sir, in terms of capital expenditure, what is our plan for this year?
We would be doing a capex of at least 12 to 14 crores this year.
And that will be by borrowings?
No. That would be from borrowings, the consolidation plan that we have currently, right? So in that, the land sales is also included, the parcels of land sales. So that would be mostly to self-accrual. No more, borrowing is nowhere in the horizon for this financial year. In fact, like I said in my opening remarks, debt reduction is a target for this financial year.
Okay. And sir, talking more about volume growth, you said that you introspected why we did not have very significant sales growth in this year.
Mm-hmm.
So can you just highlight, what couldn't go as per our plan earlier?
Okay. I'll try to cover 3, 4, 5 points, whatever I can cover in this span, okay, in a short way. First and foremost was the macro factors. In the beginning of the year, we were looking, we thought the markets are slow and sluggish because the Indian elections were ahead of us. But unfortunately, post-elections also, there was no as such boost. Then, since we are relying on the domestic as well as the exports market, our primary target for last year was to enhance the export sales. Then came, and one of the major area at that time we were focusing was the US market. So then the US elections were upcoming. Then in between that, the budget was there. So multiple factors, and this volatility remained there throughout the year by chance. But like I said, that we have learned after the introspection that we can counter those macro factors if we are focused on in certain terms, not just growth but the expansion part as well. If we broaden the product category, we explore newer markets, then these macro factors can also be countered. So first and foremost was that. Secondly, particularly talking about the steel markets, so I will give you just a few figures that I had just jotted down earlier. So there was one factor that 2018-19, the wire rod price that we were buying, that is the most basic product that we buy as raw material, the cheapest one. So that was priced at 44 rupees in 2018-19. Then in 2020-21 post-COVID, it reached like a level of 64 rupees. Then in 23-24, it went back to 48 rupees, which we expected was the worst. But unfortunately, during 24-25, it further went down to a level of rupees 43 or 44. So, the overall pricing structure also hampered. But again, since we are already focused on selling the products which cost around, the selling price are around 250 or 300 rupees per kg. So we would be, we immediately changed our strategy back in March that we would be primarily trying to sales, outgoing sales that we will try to do is of the products which are higher value and higher margin proposition. We won't further focus on, selling the products which are not that much valuable or that much profit making. So we have drastically shifted in that over last 3 months. So that would be the second way to counter another macro factor that occurred our way. And third factor, which was internal majorly, that we planned this consolidation. We purchased the land. The acquisition of the land was completed back in August. Then we also had a deal for the sales of one of the plants, through which we planned our construction activities and the expansion activities, the funds that we were about to realize from there, from the proceed of that sale. But unfortunately, we made a deal back in November, but it got slipped out because of non-payment from the other side. So we had to look for another deal, which we again have cracked recently, but still the paperwork has to be done. That's why we are not announcing it. So that factor also somewhere hampered our internal strategy because the things got delayed, and that is why we were neither able to shift, and we had to again rework our current facilities a little bit so that we can produce more. So that was third internal factor that hampered it. And fourth was that the overall geopolitical factors that were going on, the uncertainty level was very high, and due to which decision making was hampered to an extent. And now since we know where the flaws existed, and we have worked them out to the best of our capabilities, and the results should be soon out, like by the results of H1 financial year 26, I hope. So that is my hope, and I see that right now we are positioned very rightly with the upcoming things as well as the overall macro factors going on from last 1.5 months. So they are slightly skewed in the favor of any Indian steel manufacturer. That is why I see that, the future should be very bright.
So that's helpful. Sir, so are we seeing that kind of a traction? We are already 2 months into first half. So are we seeing that kind of growth, that kind of...
Yes, I mean the April this year was better than what the April was last year. So the first month is usually very, very dull because, everyone is doing inventorying and etc., etc. So the first month of financial year is usually dull, but it was better than the last year. April to April comparison.
Right. And similarly, in the export market, are we seeing better traction?
Yes, we have we have already exported 4 containers by now. We are 5 containers maybe. So usually it was 1 or 2 containers earlier.
This month or these 2 months you're saying?
These 2 months. And right now we have in pipeline around 5-6 containers. Like I said, the nails container is also there, which was not there earlier, last year first quarter. So those, in stainless steel products as well as in the nails product, now we have order booking in both from the export market.
Okay. And sir, what the CapEx that we are doing this year, what is that
Mhm.
for?
That would be primarily for consolidation and few additions for GI wire, like I said in my opening remarks, that is galvanized wire. Okay. So that is a, you can say, supplementary product to our existing product line. So for that GI wire in the new facility, as well as galvanized wire, and further, like for some stainless steel finished kind of product.
Okay, sir. Thank you for answering all these questions in detail and all the
Thank you, Bhaviji. Thank you, Bhaviji. Thank you for the question.
Thank you. Our next question comes from the line of Siddhi Joshi, who's an investor. Please go ahead.
Hi, am I audible?
Yes, ma'am. Please go ahead.
Okay. So have you introduced any new product variants or grades in H2 FY25? And if how are your customers responding to these additions?
Siddhi, good afternoon. Thank you for your question. See, if we talk in terms of grades and everything, please know that, we are into an industrial product line kind of a thing already. We have 8 product lines in total, but the number of SKUs is huge. I think if we go on counting, it would be 3,000 plus. The SKUs are more than that. And we keep on developing newer things, like on the top of my mind, that the things that we have, that I have, like in last 6 months, whatever developments we have done. So we have added on to few profile segments, special profile. It can't be shaped like a square, hex, या round है. अलग प्रोफाइल है, some round corner, आड़ा तिरछा का प्रोफाइल है. तो वो करा है, उसका अच्छा 35-40 टन, मतलब approximately 25 lakh per month, and it is a in fact low value but high margin product. In terms of margins, it will exceed 20-25% kind of gross margin in this, and the costing is not much higher, so the overall net margin will also be higher in this product. So one of the product is that has been developed for one or two of the particular customers who are regularly buying from us. So that means the response is good. Other than that, we keep on experimenting with newer grades and everything. As far as the new product line is concerned, that would be done in H1 and H2 of financial year 26. Last year we didn't, started with the production of any newer product, because the already existing products that we added to our product line back in 23-24, those were still under the process of, developing, market development. So we didn't added any new product line, but as far as the SKUs or newer grades are concerned, that is a constant process that we keep on doing for improvement in the margins, as well as for getting a loyal and long-term market base for ourselves, a customer base for ourselves.
Okay. Also, I wanted to know how has the company performed in terms of repeat orders or increased order size from existing customers in H2?
सिद्धि जी, हमारा जो वो रहा है retention rate, that would be higher than 90%. It was earlier also, and right now also we have retained customers as long as who have been associated with us for last 35 years. ये चीज मैंने कई सारे मतलब अपने मीटिंग्स और कॉल्स में मेंशन करा है. तो रिटेंशन रेट रिमेन्स द सेम. इफ वी टॉक कि भाई रेवेन्यू ओवरऑल क्यों गिरा लास्ट ईयर, तो दैट वाज ओवरऑल मार्केट सिनेरियोज में जो मेरे कस्टमर थे, मैंने भी कम से कम जो 10 कहेंगे टॉप 10 कस्टमर्स होंगे, उनसे मैंने डायरेक्टली इंटरेक्ट करा. एंड व्हाट आई रियलाइज वाज देयर डिमांड was overall 70 to 75% of what it used to be in the previous year. So that was the main reason, but otherwise we have retained the customers as well as gained a good number of new customers, and that's what has contributed to our current revenue.
Okay. Thank you for answering my questions. That's all from my side. Thank you.
Thank you, Siddhi.
Thank you. The next question comes from the line of Rajesh Jain from NB Investments. Please go ahead.
Hello. Can you hear me?
Yes, sir. Please go ahead.
Yeah. Sir, my first question is regarding the consolidation of the two plants. So you have already given an announcement that you have acquired 4 acres of land. So what is that timeline? How you are planning to do, shifting both the, whatever the machineries are there in the two plants to the new one? And when are you planning to sell the existing one of the plants? So if you could share us some time schedule.
See, the original planning, as per the original planning, we should have completed it in another 2-3 months maximum. But unfortunately, like I told Bhaveji also, who was asking me questions earlier, so I told him that, we did a deal for selling of one of the lands, but somehow it, got cancelled on the way due to non-payment from the other side. Thus, we had to extend the timeline, but definitely for sure within this financial year, all the things should be completed with our shifting done successfully without hampering any kind of production or revenue, first and foremost, and we would be there in the new facility within this financial year, working at the best of the capacity. As well as the land deals, since 2 of the land deals have to be done, one of them would be completed within this financial year for sure. And, if I have to give a ballpark, the second land sales should also have been done by the end of financial year. I can say up to 80% chances that it should also be completed by the end of this financial year. So that would be the timeline that within this financial year, all these things of consolidation and land sales should be completed.
So you have plans to sell both the existing plants within this financial year. That is the plan. That is that understanding is correct?
Understanding is correct. Only one minor modification that we currently have 3 facilities.
Okay.
Right? Right. So 2 of them would be sold. One would remain intact and operational as it is. And the newer one would be there in operation. So there would be 2 facilities remaining.
Okay. Sir, in spite of your effort, in case if whatever the planned selling doesn't happen of the existing plant 1 and 2, will it still hamper your shifting to the new plant and consolidating there?
In that case, we would be requiring some amount of external funding in that case.
Correct.
Right. So, but I mean, this year's goal doesn't include failing on the part where we won't be able to shift, because definitely we would be doing the shifting process and everything within this year. Maybe the land sales part gets plus minus 5 to 6 months kind of thing. But this time to ensure that we have shifted to the new facility, because there the cost savings and the synergy levels are very high. So we have to definitely complete it within this year. That is why, in case by say July or August, which we are very hopeful that not hopeful, we are able to foresee somewhere that the deal should get done within this month itself, last by July. But in case something goes up or down, then we would be planning an external funding. But anyhow, we have to shift within this year.
Okay. But the construction work, they're ordering for any new machineries or everything has been completed, and it is as per the target, so that you could do this shifting before this. financial
Yes.
year?
Yes. That part is already logged and done. Only the final instructions are pending, and for that we were waiting that some kind of land proceeds from land sales should come to us.
But already the new land is already registered in the company's name and everything.
It is already registered. CLU is done. It is ready to go. The boundary work has been completed back in January. The land filling work is also completed by now. So everything is in place. Only the part of hardcore construction is pending and the installation of machinery is pending.
Okay, but approval from the concerned authorities are already in place, or we are yet to receive?
Already in place. Since we were getting delayed, we completed that part basically.
Okay, fair enough. So second thing, you said that you're trying to do some capex work. So would that be in the new plant or in any of the existing plants?
New plant.
It is for the new plant. Okay, that's clear.
Right.
So the second question is, all these orders that you've got from Ordnance Factory or the HAL. So from next year onwards, since you would be supplying them from the new plant, do you have to undergo this approval process once again?
No, not at all.
It's not required.
These are product approvals, not the plant approvals.
Okay, that is very clear. So my next question is regarding the drop in margins. You have already given the reasons for why the top line you could not grow. But regarding the bottom line, again, last year, compared to last year, we are down by 1% as far as the EBITDA margins are concerned.
Right.
So my two questions there is, one, what are the reasons for this drop? And second, what is that you are targeting to achieve in the current financial year?
So there are two parts to your question. First and foremost, the reasons that were applicable for the drop in the top line are also the reasons for the drop in the bottom line, because there was a kind of selling pressure that the top line requirements are not meeting out. The customer demand was already on the low side. So we had to, by November, December, when the festive season was also gone, the Diwali season, which is usually the peak time for us. The maximum sales go in the month of, say, in the third quarter usually, right? When that was not happening, to push the customer to buy more, we had to give certain kind of discounts or, some kind of offer so that at least they are buying a little more than what they require. Right. So ultimately those factors which affected the top line were also somewhere responsible for affecting the bottom line, which was a very unique kind of situation in our industry, because I also have been into business for now almost 14 years. This was the first time we had to see such a situation. So this was somewhere a rare case.
Okay. Regarding how much you are targeting to maintain this year?
This year we would bounce back with similar kind of margins that we had earlier, and plus if what the strategy that we adopted from March onwards, that we would be primarily focusing on the sale of just the high margin, high value products. Like if we have 10 people, for example, if we have 10 people in our sales team, 7 to 8 out of the 10, I can say 70% of the sales force or marketing force is working on the sales of high value, high margin products, or even low value, high margin products. So we have entirely shifted, incentivized them for the sales of those products rather than increasing or boosting the sales of products which don't have that kind of margin. So if this strategy works well, and which we should know by the next quarter, So in that case, I think the margins can even be better than what it was in the margin percent should be better than what it was in financial year 23-24.
Okay. Very clear, sir. So my next question is, as you have also shared that, this year you are targeting for 30 to 35% of growth in the top line.
Right.
So I do not know whether steel prices have moved up from that, whatever, 43, 44 level. No. If it has not moved up,
no. Right.
So then all these 30 to 35% has to... Yeah.
So may we request that you join the question queue, sir? There are several participants waiting for their turn, sir.
No problem. Can I complete this question at least?
Yes, sir, please.
Okay, thank you. So this 30 to 35 growth, from where you are expecting, what gives you so much confidence to have that target?
First, like I said, even in the previous answer, that we have directed our sales team and the entire marketing efforts for the sales of high value and higher margin products. First and foremost is that. Secondly, during one of the answers I gave to the first person who questioned me, that we had few bottlenecks related to the export sales of high value or high margin products, which we have cracked down in last 1 or 2 months, right? So once we have cracked down and we are already in the execution process, and that's why currently we have 5-6 containers in the pipeline for the first time in the history of company. So with those bottlenecks gone, I think the sales should, within next 3 to 6 months or maybe 7 months maximum, the sales should multiply in the exports market for those high value items. That is why, like I said, one more thing I said earlier, that upon introspection, we came to know that due to the small size of our company, these macro factors can also be countered by developing and creating newer markets and a entirely new segment for ourselves, and which we have realized, and we are already in the execution process. Thus, within next 3 to 4 months, the sales should jump from those products which are already priced, say, 200 rupees per kg, 250 rupees per kg, or 300 rupees per kg, rather than 44 rupees per kg.
Thank you, sir.
Thank you, sir.
Thank you.
Our next question comes from the line of Nalin Singh from Finviz. Please go ahead. So the current participant has left the queue. I request you move to the next one. The next question comes from the line of Ashwani, who's an investor. Please go ahead.
Hello.
Yes.
Hello.
Yes, Ashwani, please go ahead.
Yeah. Sir, I just wanted to know that after we sell both our lands and we invest whatever is needed for the capital expenditure, what is the ballpark figure we think we will have in excess, which then we may use to repay our loans or we may use for any other purposes? If you can give us a ballpark number for that.
Ballpark would be 15 to 20 CR.
So 15 to 20 CR will be left with us after all the capital expenditure.
Yeah.
And with this capital expenditure, are we only, we are only doing the building and shifting our machineries, or will be having some new machineries, and if so, then how much capacity will they increase?
The ballpark should be around 3,000 tons to 6,000 tons. I can just give you the ballpark right now. Okay, the increase in the capacity I'm talking about. Okay, and it would include the newer product, that is GI wire, as well as some stainless steel products, maybe components, screws, etc.
Okay, fine.
It is not just about consolidation investment. It is also about the expansion into new products as well as increase in the capacity, the capex that I am.
Okay, got it. Thank you.
Thank you.
Thank you.
Our next question comes from the line of Nalin Singh with Finvis. Please go ahead.
Hello, sir. So
Hello,
you have
Nalin.
mentioned that you have got officially registered as a supplier to the Ordnance Factory Board. And in the opening remarks, you mentioned that you are getting some defense orders from HL as well. So if you can just guide us, what are the implications of getting registered as a supplier to Ordnance Factory Board, and what kind of revenue or traction we are seeing from this development in a couple of years?
What was the first part of your question? Sorry.
First, what was that we have been registered as supplier to the Ordnance Factory Board?
I got that we are supplying to HAL, BHEL, and NTPC right now, and we have repeated orders from HAL. That I said. You asked me second part is clear that what kind of volumes or revenues we are looking from this segment. First part was.
Yes. Yeah, I think this was the gist of the question, so you can.
Okay. See, definitely, if we see the government policies, initiatives, and the kind of boost that is there, and I have seen when we are bidding for the tenders and everything, the process has got far more easier in terms of and transparent majorly. That if you are able to crack the pricing and the quality requirements and everything, you definitely get the orders. So and whatever product mix that we currently have, and as per our analysis, the revenues from this segment, with the kind of focus that we have in the coming years, should be quite huge. The potential is very huge, and we should be able to tap that potential over the coming years. Definitely, it would be slightly gradual process, but in the long term, it should give us a very good percentage of revenue out of the total revenue. That is my estimate.
Okay, so just following up on this, so how many registered suppliers are there in the categories in which we are supplying? What kind of competition we could face in that, and what kind of win ratio we can see from the defense products?
नलिन जी, देखो ये तो मैं आइडिया नहीं लगा सकता कि क्योंकि हमारे जो है ना प्रोडक्ट लाइन बहुत सारे हैं, 8 प्रोडक्ट लाइन्स हैं, राइट, एंड वी आर ट्राइंग फॉर we fill in the tenders for most of our products. तो हर एक में अलग अलग सप्लायर आता है. इनफैक्ट दैट इज द प्रॉब्लम दैट वी ऑफन फेस when we have to give a peer review comparison in the listed space also, right? क्योंकि एप्पल टू एप्पल कंपैरिजन है ही नहीं है अपना. तो जैसे हम फॉर एग्जांपल न्यूमेटिक नीड्स के लिए हम लोग टेंडर्स भरते हैं, राइट? सो देयर द L2, L3 और L1 इन केस वी आर नॉट द L1, तो उस कैटेगरी में कोई और ही सप्लायर्स आते हैं, सप्लायर नेम. जब हम एलॉय स्टील और कार्बन स्टील ब्राइट बार के लिए टेंडर्स भरते हैं तो उस कैटेगरी में कोई और ही नेम्स आते हैं. गॉट इट? गेटिंग माय पॉइंट कि स्टेनलेस स्टील में भरते हैं तो कोई और कॉम्पिटिटर्स आते हैं, क्योंकि सब लोग ये सारे प्रोडक्ट का मिक्स नहीं बना रहे, राइट? तो हर कैटेगरी में अलग अलग तो कॉम्पिटिटर्स हो जाते हैं फर्स्ट एंड फॉरमोस्ट. तो कितने कॉम्पिटिटर्स है दैट इज वेरी हार्ड टू एनालाइज, particularly for Maiden Forgings Limited, right? First and foremost is that, and secondly, अगर हम ये सारे प्रोडक्ट्स कंबाइन कर दें, इनफैक्ट जो GI वायर में अभी बार बार नाम ले रहा हूँ, जिसके लिए हम अब इनफैक्ट वी हैव ऑलरेडी ट्राइड a little bit part of that in our existing facilities because we cracked some kind of technique to develop that. So we already started doing that because that has a very, very huge scope over there. Because GI wire is getting used in all the barbed wire across the border. You know, जो barbed wire लगती है borders के across, तो उसमें सारे GI wire का ही application है. So that would have a super huge requirement. Already our alloy steel bright bars has huge requirement. exist in NTPC, which we already have supplied, BHEL. They have a huge requirement for our alloy steel bright bars and stainless steel bright bars. So the potential is huge, like I said, and we are trying to tap best out of that.
Thank you. Our next question comes from the line of Rajesh Jain from NB Investments. Please go ahead. Mr. Rajesh Jain, please go ahead with your question.
Can you hear me?
Yes, sir.
Yes.
Thanks for the opportunity again. Sir, just wanted two clarification. I think for the earlier questioner, you were saying that when we consolidate and ship, the capacity would be up by 5,000 to 7,000 metric tons. Is that understanding is correct?
Right.
So with the existing facilities, how much revenue we can generate?
जैन साहब देखिए इसमें क्या है ना, क्योंकि हमारी प्रोडक्ट लाइन बहुत सारी है, स्टेनलेस स्टील, एलॉय स्टील, कार्बन स्टील, हम ब्राइट बार ही 3 कैटेगरीज में बनाते हैं, राइट। तो अब क्या है कि कार्बन स्टील ब्राइट बार जो है वो शायद 55 से 60 रुपए का सेलिंग प्राइस है, एलॉय स्टील का कुछ 80 से 90 रुपए का प्राइस है, और स्टेनलेस स्टील का तो मतलब आप लगा लो आज भी लोएस्ट प्राइस में भी 190 से लेकर के 330 रुपए तक का प्राइस है। गॉट इट। और वही मशीनरी जो है वो तीनों कैटेगरीज को प्रोड्यूस करती है। स्टेनलेस स्टील में एक बॉल पार्क ये रहता है कि अगर उस मशीन पे हम बजाय कार्बन स्टील के स्टेनलेस स्टील प्रोड्यूस करते हैं तो उसकी कैपेसिटी 70% रह जाएगी अगर हम 100% उस पे स्टेनलेस स्टील प्रोड्यूस कर रहे हैं। लेकिन इन टर्म्स ऑफ रेवेन्यू एट इवन 70% कैपेसिटी it will the revenue will turn out to be 4 times of what it is existing। मतलब अगर 200 करोड़ कर रहा हूँ तो अगर मैं पूरे स्टेनलेस स्टील ब्राइट बार बनाने लगता हूँ, मतलब इतनी मार्केट डिमांड मेरे पास आ जाती है और सब कुछ फेवरेबल बैठ जाता है स्टेनलेस स्टील के फेवर में, देन द सेल्स कैन गो फ्रॉम द सेम फैसिलिटी, एग्जिस्टिंग फैसिलिटी, आई एम नॉट इवन टॉकिंग अबाउट न्यू फैसिलिटी, देन इट कैन गो एज हाई एज 600 करोड़ और 700 करोड़।
Thank you. Ladies and gentlemen, due to paucity of time, that was the last question for the day. I now hand the conference over to Mr. Harshil Ghanshani from Kirin Advisors for closing comments.
Yes. Thank you everyone for joining the conference call of Maiden Forgings Limited. If you have any queries, you can write us at research@kirinadvisors.com and info@maidenforgings.in. Once again, thank you for joining for everyone. Yeah.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.